Hey Bitcoiners, Lachie here from Edge 21. Today we're breaking down Bitcoin's latest price movements between 101 and 103k. What's fueling this move, what do the latest charts reveal, and where could Bitcoin be headed next? Let's dive in. Bitcoin is trading in a tight range, oscillating between 103 and 105k. This latest uptick might seem modest, but it's happening against a backdrop of strong bullish momentum. After touching an all-time high of 109k in January, Bitcoin weathered a sharp pullback to 74k in April, only to rebound by 24%. Now it's consolidating near the 103k level, a key resistance from past cycles. Several factors are converging to support Bitcoin's price. Institutional inflows. Over the last 2 weeks, US spot Bitcoin ETFs saw $4.6 billion in inflows, offsetting previous outflows and pushing total ETF holdings to just shy of their all-time high at 1.171 million BTC. This renewed institutional confidence is a key tailwind. Macro environment. The Federal Reserve's dovish signals and easing global trade tensions have created a favorable backdrop for risk assets like Bitcoin. With US inflation coming in lower than expected, investors are rotating into assets that offer growth and inflation protection. Post-halving dynamics. The 2024 halving event has reduced new supply, historically leading to price surges 12 to 18 months later. We're now entering the window where previous cycles saw accelerated gains. Long-term holders are showing conviction. The long-term holder net unrealized profit or loss, the NUPL metric from Check on Chain, reveals that most investors are sitting on healthy profits, but the market is not yet overheated. Maturing holders are keeping coins off exchanges, reducing sell pressure and supporting price stability. Short-term holders who were recently underwater are now back in profit thanks to the rally, which could mark a pivot point for renewed buying interest. Bitcoin is currently trading above all major moving averages, including the 50-day and 200-day, signaling positive momentum. The Maya multiple, a ratio of price to its 200-day moving average, shows Bitcoin is in a fair value zone, not overbought. This reduces the risk of a sudden correction and supports continued accumulation. Implied volatility in the options market is at its lowest since July 2024, suggesting traders are not expecting wild swings in the immediate term. Historically, low volatility often precedes big moves, so keep an eye out for a potential breakout. Technical analysts are watching the 104k resistance closely. If Bitcoin can break and hold above this level, it could open the door for a run at the 109k all-time high. Support sits around 100k with a strong base at 95k. Market sentiment is bullish, with the fear and greed index at 71 showing greed, but not at levels that typically precede a major sell-off. Seasonality data suggests May is historically a positive month for Bitcoin, with average gains of 7.4%. If institutional inflows and macro tailwinds persist, analysts see potential for 113k in the coming month and even higher targets. Some models project 130 to 163k by year end, and power curve models suggest 200k is possible in Q4. So what's the bottom line? Bitcoin's latest move is supported by strong fundamentals, robust institutional demand, and a favorable macro backdrop. While resistance at 104k is key in the short term, the stage is set for more upside if current trends hold. Well, that's a wrap on today's Edge 21 Bitcoin price analysis. Drop your questions or predictions in the comments. We want to hear your take on where Bitcoin is headed next. Remember, at Edge 21, we're here to keep you ahead of the curve with personalized, noise-free content, from trending articles and videos to real-time price alerts and expert summaries. If you found this breakdown helpful, hit like, subscribe, and turn on notifications so you never miss an update. Thanks for watching, stay strong, and hodl on.